Hi, welcome to my channel, Second PUC Accountancy. Learn, understand, and excel. Today, we are going to see Chapter 2 Admission of a Partner. Now, what is reconstitution of a partnership firm? When any changes takes place in the existing partnership agreement, it is called as reconstitution of a partnership firm. Or in other terms, if any change in the structure or in the composition or in the ownership of an existing partnership leads to a new agreement, that is called as reconstitution of a partnership firm. So, a end to the existing agreement and it leads to a new agreement with the effect of changes in the relationship among the members of a partnership firm is termed as reconstitution of a partnership firm. We'll see what are the modes of reconstitution of a partnership firm. The reconstitution of a partnership firm usually takes place during the following ways. That is, when there is a change in the profit sharing ratio among the partners, or if the firm admits a new partner into the firm, or in case a partner retires from the firm, or there is a death of a partner takes place in the partnership firm. So in this case, the reconstitution of a partnership takes place. So now we'll see what is the meaning of admission of a partner. It is a process in which existing firm takes a new person into an existing partnership, then it is called as admission of a partner. For example, A and B are existing partners who are running a partnership firm, and due to certain reasons, maybe it can be for increasing the capital, the firm can decide to take a new partner C into the partnership firm. This is called as admission of a new partner. Now, in this case, what are the rights of this new partner? The new partner can exercise all the rights of the old partners in the firm. So, therefore, the new partner has the right to share the assets of the business. He has all the right to share the profits of the business in future. The new partner also has the right to take part in the operations of the business. He can take an active part in the operations of a business concern, and he also has the right to take decisions for the firm. What is the purpose of admission or admitting a new partner? These are the reasons or the purpose for admitting the new partner. It can be to increase the capital resources of the business. If in case the firm needs more capital for running a business operation, it can admit a new partner. Or it can be to enhance the managerial skills and competencies in the firm. So they can admit a new partner. Or it can be to expand the activities of the business. So they might need an additional partner to run the activities of the business. So likewise, for these reasons, the firm can admit a new partner. Now, we are going to see under admission important points. That is, what are the main calculations or the accounts or adjustments that have to be made under admission. The important point on admission are we are going to see in this chapter how to calculate the new profit sharing ratio. And next, we're going to see how to calculate the sacrifice ratio among the old partners. Next, we will be seeing valuation and adjustment of goodwill in the firm. Next, revaluation of assets and reassessment of liabilities. Next, we will see how to distribute the accumulated profits and reserves. Next, we will see how to prepare the partners' capital accounts and adjust the partners' capitals. And then we will be seeing how the capital contribution is made by the new partner. So these are the main points which we will be looking into under admission of a partner. Now, first, we will see how to calculate the new profit sharing ratio on admission of a new partner. Now, what is this new profit sharing ratio? It is the ratio in which the existing or the old partners and the new partners agree to share the profits and losses in future after admitting the new partner. Why this new profit sharing ratio is to be calculated. What is the purpose of new profit sharing ratio? The new profit sharing ratio is to be calculated to share the future profits of the partnership firm after admitting the new partner and to adjust the partner's capitals. Calculate new profit sharing ratio on admission of a partner. Now, what is the formula to calculate the new profit sharing ratio? New profit sharing ratio is equals to old ratio, that is the old partner's share, minus the share sacrificed. Now, when a new partner is admitted, the old partners will have to sacrifice a part of their share for the new partner. That is called as share sacrificed. So therefore here new profit sharing ratio will be old share minus the share sacrifice. Now we will move on to see the next calculation that has to be looked into, that is sacrificing ratio. Now what is this sacrificing ratio? As we had already seen, ratio in which the old partners surrender or sacrifice a part of their share in favor of a new partner is called as sacrificing ratio. The purpose for calculating the sacrificing ratio is to calculate the new profit sharing ratio. As we had seen in the calculation of new profit sharing ratio, we need sacrificing ratio. So therefore, to calculate new profit sharing ratio, we should know what is the sacrificing ratio. And this sacrificing ratio is required to compensate the old partners by new partner by way of goodwill. So here, this is the purpose why we need to calculate sacrificing ratio when a new partner is admitted into the firm. What is the formula to calculate the sacrificing ratio? Sacrifice or share sacrificed is equal to old share minus the new share. That is the old partner's old share minus the old partner's new share, which will be the share sacrificed. Now, we will see the next important point under admission, that is valuation and adjustment of goodwill. Now, first and foremost, we should know what is goodwill. Goodwill is the value of the reputation or the good name that is earned by the firm in respect of profits expected in future over and above the normal profits is called as goodwill. The goodwill is also the value of good name, or it can be the reputation that is earned by the firm over the period of time, okay, which helps the firm to earn super profits in the future. Now, we are going to see what are the factors that are affecting the value of goodwill in the firm. The goodwill can be affected due to the nature of the business that is carried out by the partners or type of business that is carried out by the partners. The goodwill can also be affected by the location where the business is carried out. And the goodwill can also be affected by the efficiency of your management, how efficiently you are able to manage your business concern. And it also be affected by the market conditions or market situations. Okay, and then it can also be affected by certain special advantages you receive in the government, from the government, or in the society. The reputation and the good name can be affected. So these are the factors that affect the value of goodwill. Okay, now why you need this valuation of goodwill in the firm? We need to value the goodwill of the firm for reconstitution of a partnership firm. Whenever a partnership firm has to be reconstituted, the goodwill has to be valued. The valuation of goodwill has to be made for reconstitution of a partnership firm. And when a firm has to be dissolved, the value of goodwill has to be estimated. Next, when the firm sells its business concern, or when there is an amalgamation of business, then there is a need for valuing the goodwill. Now, to value this goodwill, there are different methods. The methods of valuing the goodwill are, there are three methods. One is average profits method, second is super profits method, and third, we call it as capitalization method. Now, let us see these methods one by one. Now, the first method is the average profits method. This method, the goodwill is calculated at an agreed number of years of purchase of the average profits of the past few years. So, under this method, we calculate the goodwill with the agreed number of years of purchase of the average profits of the past years. So, here the goodwill is equal to average profits into the number of years of purchase. How to find the average profits here? Average profits will be total profit divided by the number of years. So, what are the steps to be followed here under average profit method? First, we have to find out the total profits of the past years. The second step is to calculate the average profit. And the third step is multiplying the average profit by the number of years of purchase. So let us see one example under this average period method. The profits for 4 years are given as rupees 40,000, rupees 50,000, rupees 60,000 and rupees 50,000, and goodwill is valued for 3 years purchase. Now let us find out the goodwill under average profit method. So follow the steps. Now first let us find out the average profit. Average profit is the total of the past 4 years profits, which is to be divided by 4. So that is 40,000 plus 50,000 plus 60,000 plus 50,000 divided by 4, you will get rupees 50,000. That is the average profit. Now, once you get the average profit, now find the goodwill. So, as the goodwill has to be calculated for 3 years purchase, goodwill is equal to average profits rupees 50,000 into the number of years of purchase is 3 years. So, goodwill will be 1,50,000. Now, we will move on to the next method, that is super profits method. Under this method, the excess of actual profits over the normal profits is termed as super profits. The goodwill is valued at an agreed number of years of purchase of the super profits of the firm. So here the goodwill formula will be number of years of purchase into the super profits. How to calculate the super profit? Super profit is equal to actual profits minus the normal profit. So normal profit, if it is not given in the question, how to calculate the normal profit? Normal profit will be capital employed into the normal rate of returns. Now let us see the example. Here in this example, average profit is given as 8 rupees 80,000, capital employed is rupees 5 lakhs, normal rate of return is 10%, and the goodwill is to be valued at 4 years purchase. So first, let us find out the normal profit. Normal profit formula is capital employed into the normal rate of returns. So capital employed, we already know here, it is 5 lakhs into the normal rate of return is 10%, which will be rupees 50,000. Now, once normal profit is calculated, now calculate super profit. Super profit is equal to actual profits minus the normal profits. Actual profit or the average profit is given as 80,000. So 80,000 minus the normal profit 50,000, the super profit will be rupees 30,000. Now applied in the goodwill formula. Therefore, goodwill will be number of years of purchase into super profits. You can also write it as super profits into the number of years of purchase. So goodwill is equal to 30,000, that is the super profit what we had calculated, into the number of years of purchase, which will be equal to rupees 1,20,000. So this is the super profit method to calculate the goodwill. The third method is called as capitalization method. Under capitalization method, again, we have two methods to be followed to calculate the goodwill of the firm. The first method is capitalization of average profits. Under this method, the value of goodwill is calculated by deducting the actual capital employed from the capitalized value of the average profit, a normal rate of returns. So here the formula to calculate goodwill will be capitalized value of average profit minus capital employed. Now kindly note here the capitalized value of average profit. How to calculate the capitalized value of average profit? That is equal to average profits divided by the normal rate of returns. And the capital employed. How to calculate capital employed here? Capital employed is equal to actual investments, or it can be the net assets. The second method is under capitalization method is capitalization of super profits. So under this method, goodwill is equal to super profit divided by the normal rate of returns. Let us see an example here for the first method, that is capitalization of average profits. In the question, average profit is given as 1 lakh, normal rate of return is 10%, capital employed is 8 lakhs. First, we have to find out the capitalized value of the average profit, that is equals to the average profit divided by the normal rate of return, that is equals to 1 lakh divided by 10%, 10 by 100, which can also be written as 1 lakh into 100 by 10, which is equals to 10 lakhs. The goodwill will be capitalized value of average profit minus the capital employed. That is 10 lakhs minus 8 lakhs will be 2 lakhs rupees. 2 lakhs is the goodwill under capitalization of average profits. So this theory is very important. The calculation of goodwill is a very important topic under the admission of a partner. Let's see next topic in the next video. Thank you.